Okay, what's up, traders? It's currently February. No, what's up, traders? It's currently March 3rd, 2026, and price action for Bitcoin is currently moving at a possibly an uptrend. If we look at the 4 hour here, we see a lot of consolidation happening, especially around this period. Bitcoin currently on the daily is at an all time low for the year because we currently were sitting around here during November, and then here's January, and then the big rip down happened. So we're currently consolidating around this area for the past couple of days to, I'd say, 1 to 2 weeks. And you could obviously, if you mark out the highs and lows here, we've just been ranging up and down, up and down. So it's very inconsistent. However, on the macro, it's just a bunch of consolidation in this period. If we begin to look for any possible trend movement towards the up or downside, there's no indication of that whatsoever because price clearly hasn't broken out. I would say that this is the swing high and this is the swing low for the daily. So for a swing trade to happen, we would have to look for something amidst this area or this area and then a confirmation on the trend. However, there's nothing that tells us that whatsoever. So if we move into the 4 hour, still we don't have a clear sign of where price wants to move. However, there's possibly a movement here, and I'd like to point out that Bitcoin is sort of correlated with the move with gold right now because gold has been ticking up like crazy the past year, really all times, right? If we look around here recently, gold actually dropped, let's see, about, so it's 54 to 50, 54 to 51, so about 300 points. And then around the same time, Bitcoin decided to move up a bit, but it also dropped recently as well. They're not strictly correlated. I just made a small little observation along the way. But disregard that. If we're solely looking at Bitcoin itself, the objective today is to identify where exactly the market is moving for Bitcoin. So what I like to do is I do all this under the realm of ICC, which is nothing new. It's just a way of seeing the charts, right? And it's pretty much seeing the same exact thing every other trader does. It's seeing price action and it's making it super simplified so that you can spot things on a very simple basis. So it's simply just, to really summarize it, keep it short, it's just spotting trends on a very obvious technical basis. So uptrends, downtrends, consolidations, things like that. And then you also want to spot ICC, so indication, correction, continuation. So to keep it really short, let's use this as an example, this movement right here. So for an uptrend to solidify a confirmation on an uptrend, what you want to spot are higher highs and higher lows. So let's say we came from whatever, right? And price all of a sudden decides to form a pattern. Well, it's starting to form a pattern, so it makes from this point here to here. It broke out from this high, so it's a higher high, and then it broke down and made a higher low because it's higher than this low. And then what we want to target from here is the entry at this point. If we entry here, we can target highs from right here. So because this is our indication, and then we can also I said also twice. We can also target anything past that. So cutting partials here, or if we decide that this is the end of the trail, so we can cut off our entire position and then just let it do its own thing. But we can also split profits here and then, write off whatever else is happening in the market. So that's what ICC is, right? So using ICC as a way of seeing charts, because I've been doing this for a long, long time, and I want to document this so I can hold myself accountable. So taking a look at Bitcoin here, obviously it's in the daily is on a consolidation phase right now. I'm not expecting a crazy move to where we're starting to see movement all the way up to these highs. However, I still marked it because if I decide to do a swing trade, I need everything to align, including the daily. So if we look at the daily over here and we use the highs and lows as reference, anything that's the same, same high, so like an equal high right here, I consider it to be a lower high as applied under the teachings of ICC, credit to trades by Psi. So this would be a equal high, which is also a lower high. So this is still a downtrend, right? Also because we broke out of this low. So market was recovering and then we broke out of this low. So we made a lower low, lower high, and it's consolidating because there's no clear direction of where the market wants to go. But also if you can spot this little thing, it's a inverse head and shoulders, right? But that's not enough information for me to determine where the market's going to go, so I don't really care to spot that. However, anything from past here, if we use if we use this as a reference, so let's use an arrow to make it real easy. So high, low, lower high, lower low, lower high, higher low, higher high. So if you notice, there was a shift in the pattern as to where the market is heading on the daily. So it's forming a higher high based off of this um, this previous high right here, which was supposed to be a lower high. So it made a higher high and then it closed out above it. So that confirms the higher high. What we want from this range, if we do decide to, if we want to determine this as a possible uptrend, right? Because at the end of the day, this is what makes an uptrend, is confirmations that we're making higher highs and higher lows. We want to make sure that wherever price is moving here, that the end of the trail decides to, where's my brush? Decides to make sort of like a wave and then come back. As long as it's above this low, we can definitely assume that price will retarget this range. And if the candle closes, if the daily candle, right, so it makes a low here, if the daily candle decides to come up above this high and close out or like around here, then we can decide to dissect so we can go into the 1 hour, 4 hour and look for an entry to where price is confirming an uptrend on the 1 hour, price is confirming an uptrend on the 4 hour, prices creating lower highs, which means buyers are stepping in more than not. Doesn't matter where sellers are, if buyers are stepping in like crazy on all time frames, that's a clear, strong indication that with the daily candle closing above this high, it is more than likely confirming that we're continuing up and retargeting this high. If the daily, the 4 hour, and the 1 hour align, then at that point, I would assume that price is revisiting these local highs from all-time lows, from this year's lows. Then I would definitely split profits here and then hold out for a swing trade. Like, it'll probably do some gibberish like this, but I'll probably hold out for a swing trade like anywhere from here to here at that point, right? Now, I don't think price is going to consolidate for too long, but anytime there is consolidation, it is only for the markets to sweep up all the possible money in the bank. So like all the possible sweeps, right? So imagine like before like all this happened, like price is moving boom, 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 boom. It's just consolidating. And people are putting their stop losses here, under these lows, here, under these lows, under here, under these highs, or above these highs, or here, above these highs. And then price just sweeps everyone here. Price might even sweep everyone here, consolidate a little bit more, and then smart money comes in and then just absolutely fucking sends off price into some direction. Could be a low, could be a high, depending on the higher time frame. That's not our objective for the week. Our objective for the week is to identify where the trend possibly is going, which we just talked about. So we want it to go higher, and we're not demanding where price wants to go, because price doesn't give a fuck what we want. We're not demanding shit. We are just identifying so that we can set up early on our predictions as to where price could go, using multiple factors to strengthen our analysis and strengthen our theory as to where price is going based on the strategy we're using. So if we're using ICC, we are using as many time frame correlations with all the support levels lined up and all the uptrend confirmations on all time frames. We are supporting and supporting and supporting our thesis that price will eventually blow up out of these recent highs and just take out all the consolidation traders here and then just rip price up to retarget highs. That's what we want. And then our stop loss. So RR might not look fancy, and you have to, at that point as a trader, figure out what you want to do, if you want to take the trade or not. Stop losses, I thought I marked it up here. Stop losses are meant to invalidate the trend. What that means is if price hits the stop loss, it means that price is invalidating the trend. Price actually doesn't want to go up. Price is actually wanting to do a little bit more consolidation. That tells me that if, let's say we get into a trade and like price moves up, confirms everything we just talked about, and then it just goes down and it hits stop loss. That tells me not that I'm an idiot, but that one, the market isn't guaranteed. Nothing's guaranteed. Two, the trend is invalidated, meaning it's still consolidating on the higher time frame, which is very much fair because that's been the case this entire fucking week, month, whatever. And then three, our RR for this trade was absolute shit, right? So this would be a terrible trade to make because even if price validates an uptrend by closing out daily candle up here, 4-hour candle up here, making higher highs, 1-hour candle up here, making higher highs, whatever. If it confirms uptrends and still does shite, like the RR is already shit and everything's invalidated, so it wouldn't make sense to do anything right now. Really, it makes sense to do nothing right now. If you noticed on the 1 hour, so we are going to the 4 hour. I'm sorry, we're going to the 4 hour. Let's go to the 4 hour. If you notice on the 4 hour, let's go ahead and mark our highs and lows. Here's the low, here's the high. Higher low, lower high, higher low again, higher high, higher low, lower high. Price is still trying to figure out what it wants to do, right? There's no inclination of where price wants to go. However, this area right here was the recent high, the recent new high, meaning like anything above here could possibly indicate an uptrend if we are targeting a swing play. So price actually swept these kids, right? These guys got fucked, and anything under here would mean an indication of a downtrend for sure. So using ICC, this would be the indication that price wants to move up. And if price is itching up like this and it's creating higher lows like this, which might be the case here, I didn't take any trade to short this. If it's still supporting the support levels and making higher lows, regardless of what's happening right here, because this is all consolidation, every time price gets to this level, it rejects, right? Like when price got to here, over here, it rejects. When price got to here, I'm talking about the candles, it rejects. Here it did reject, but it closed out above, meaning buyers are hinting at a possible uptrend move, and we could retarget these levels if and only if if and only if the time frame on the 1 hour, the 4 hour, and the daily confirm an uptrend. I'm using all three time frames because I want the best chance that my money, when I long this, has everything behind it to prove that it'll move higher. Does that make sense? That way it's less of a gamble, more of a calculated risk. Does that make sense? Trading is all about calculated risks. If you're not supporting your risks with all the possible inclinations of it moving towards your trade, then you are gambling. If it's not more than 60%, if your winning rate is below, let's say 50%, and your profit factor is negative, you're gambling. If your win rate and your profit factor are not netting you profit at the end of the month, you possibly more than likely are gambling because You're not consistent, right? The goal of a trader is to be consistent and to mark and to make consistent trades. So whether you win or lose, your strategy is consistent. And then after that, after you're like a fucking robot and you can get it on the dot every time, then it's a matter of getting the best possible scenario trades for your strategy to play out even more, making the RR perfect. So like a 3-to-1 RR every time. So that way you better your odds at a higher win rate, also at a higher profit factor. So you could lose 2 trades and win the third, and you can make it all up, right? And then doing that every single time. Because the crazy part about the market that really makes 99% of traders lose is that you get a different scenario every day or every week, every month, every year. It's fair to say most people are not ready for that. I'm not ready for that. I'm only human. I'm just confessing. But I'm willing to take the risk because I understand that as a trader, if I am consistent and I apply myself to my rules, then I know in theory, trading will exponentially increase your wealth if you meet these demands, these requirements every single day. You can look at a chart, see that everything looks good, but one thing makes the whole trade super shitty, and you can walk away from it without even hesitating, without even entering the trade. If you could do that for the rest of your life, you're a winner. And that's hard. Trading is easy and hard. And it's hard because think about this. This there's a spectrum from like a good profitable trader and then every other trader. That spectrum is a bunch of shitty traders and then a bunch of rich traders. Because once you attain that skill, it's a lifestyle. It's a habit of choice every single day. Meaning, you're no longer a gambler. If you make a milli, you'll never bet a milli. You'll bet 10%. And it's no longer a bet because you're making calculated risks. Does that make sense? Whereas if you're losing because something is flawed in your system. And it could be either your strategy, your habits, your emotions, post or pre trade. So perfecting everything, it's tough. And life catches up, and then people got to make decisions, and like so many factors line up. So I'm not saying it's impossible. All I'm saying is like you really got to be him every time you trade. And rightfully for the successful traders, if that's you, right? And for the people who never give up, you better lock the fuck in. Because just because you don't give up doesn't mean you're not going to win. I mean, just because you don't give up doesn't mean you're going to win. You actually got to lock the fuck in. I just went on a complete rant. Okay, let's go back to the charts. So the objective here is we're just identifying what the market is doing. We're not necessarily picking out a trade that we want. And I'm recording this so that I hold myself accountable. If everything lines up here and we can confirm higher highs on the 4 hour. So how do we confirm higher highs on the 4 hour? Price right here is showing a little bit of confusion because it's shrinking, meaning we're making higher lows but lower highs, like a pennant almost. In order for price to confirm any sort of trend here, it has its highs, it has its lows. So let's say we swing and make a bottom here, right? And then price breaks out here. Doesn't matter what happened here. If it breaks out here and it comes back and not even retest, let's say it hits here, as long as it's not below this area, because it invalidates everything. Like, I would not take that trade, even if it's a fucking sweep. To each trader their own. I like to play it safe, right? Even though I'm net negative, I don't give a fuck. I have to correct myself. So it needs to be within the zone because it needs to support the higher lows. Because then if price is respecting every single higher low, that would tell me that I can set my stop loss here or even here if I'm real conservative, if the RRs make sense, I will set my stop loss here if and only if price decides to close out above. So let me say price goes here. If it closes out above here, I would then place my trade right here, set my stop loss here, look for a 1 to 3, possibly, let's see, a 1 to 3 here. It probably won't be the case. I would have to dissect it even more and look at the 15-minute. If price continues to respect higher lows on the 15-minute, I'll look for a closer stop loss, right? I'm willing to take that risk as so long as price respects the higher lows. So let's say it respects the higher lows and I do the 1 to 3 RR. It's probably up here. Let's say price gets up to here because we just confirmed. Think about this. We just confirmed. So this is a lower high, right? From here. This is a higher low. Higher high. It broke out. That's an indication. Higher low. If it forms a higher low, it respects the previous higher low, which means that's more than likely the end of the correction phase. If it bursts out, closes up here, and it's above this swing high, then it just confirmed an uptrend, right? Nothing's guaranteed. This is just a higher, this is highly likely that we are at an uptrend. Like think of it as a free throw. Like it just makes sense that it goes in, right? So we just confirmed the 4-hour uptrend. We would dissect it and look for an entry because we don't necessarily, like we want the 4-hour to close above here, but we also want a better position for when we're actually entering our trade. And then we would retarget these highs because it's confirmed on the 4-hour, and we have all of this to back up our trade. Look at it every time it goes up. Price, sure, whatever the fuck happened here, but because we're confirming an uptrend, that means everything that happened in the past should repeat itself. So you see how price consolidated here and then burst out? The same thing should happen here if price is respecting the higher lows and is respecting the fact that it's an uptrend. That means we retarget the highs, we split for partials, unless price really cannot get above this range, which more than likely you'll see it on the 5-minute, 15-minute, it'll consolidate here, to which then we would have to determine, is it still respecting the higher lows? If not, then should we reconsider our trade and just exit here? And that's fine, we'd be in profit. Or we can split, right? We can split. Let's say price is doing this stupid crap. If it's respecting the new buyers, because buyers are going to be looking for a new support level, which more than likely was the last resistance level. If it respects the resistance level and makes it a support level, that means buyers stepped in, and then the higher time frame, aka the 4-hour, would show respect on the higher lows, which means we could retarget this range if the low time frame reverses and confirms an uptrend once again. So look at the lines I'm showing. Higher highs, higher lows based off the previous highs and lows. Then we could retarget, right? We could retarget these highs. And whatever happens to price, if it's still stopped out here, I would still consider waiting it out for the support level, see where buyers stand. But if it starts breaking down, I would definitely sell at this range for profit, right? That's just me though. You do you. But if let's say it breaks out, then that means that this is a new, the sellers are completely stopped out. And we should then be looking for the next level of sellers, which is up here. Because there's nothing else around here for the 4-hour. It's up here. And then yada, yada, yada. You know what I mean? That's the case for that scenario. What price is doing right now? What I'm seeing right now, if I really wanted to make a fucking trade, like in this instant, I would look for a trend on the 1-hour and I would definitely look for gaps. There's clearly no gap here. Even though gaps have nothing to do with ICC. Let me just analyze this real quick. So price made this high. I don't believe we're in an uptrend thanks to the 4-hour. It's a little bit, there's a little bit of consolidation here. Price is a little bit confused. Maybe it's grabbing up a few buyers. Let's check out on the 15. Price was consolidating here. It broke on the lows and it's still continuing to go lower. I'm not using the 15. The 15 is not something I trade with because sometimes the 15-minute can lie. Sometimes the low time frame lies. What I will say is that because price made lower highs on the 4 hour, that we could be looking for retargeting these lows, meaning the support level here, because use the past as evidence, right? When we made highs here and price decided to confirm a reversal on the 1 hour, this is the 1 hour, right? So boom, lower lows, lower highs, confirmed. It basically filled the gap. If you were an ICT trader, it filled this entire gap, this FVG, right? Because there's nothing else to support. Like, we're not retargeting this because even though price is consolidating, it's not gonna hit new highs and new lows based just because the 1 hour decides to go into downtrend. It took me a while to realize that, and it should have been obvious. But what I will say is, if you're an ICT trader, this could be like a Fibonacci sort of thing where it just, like, what is this, like 50%? Yeah. So like, you do you, however you want to target that. I just like to set my RR if I'm really trying to get a trade out the way and make healthy profits. I would make sure to validate my trend confirmations. So this is a bearish trend on the 1 hour, even though it's not going to retarget these lows. I would still want to target healthy RR until price decides to invalidate it. So look at this. It actually hit TP. Let's say we decide to enter in on a trade here because this confirmed the downtrend. This is a 1 to 3 RR. Price hit TP. We can get out the trade because it literally reversed right after that and did whatever the fuck. We'd already beat out the trade at that point, so we're not worried about that. Same thing here. Price, we made a new high and we had this as a range for buyers. Like I said, we're not necessarily retargeting these lows because we made new highs. Buyers stepped in and found a new level of support, which means that this level of support no longer really matters unless we break these levels, right? So using the 1 hour, we determine whether or not price is still on an uptrend. So price is starting to consolidate here. This is a level of support for buyers on the 1 hour. It broke under. So that's an indication. It corrected back up, made a lower high. And you would scale down to the lower time frame to determine whether or not price wants to, whether or not you want to get into a trade and hit profits yet again. This would have been, if you were on the lower time frame, a 1 to 6 had you used uh, Fibonacci for like this new high and low. The 50% would have been here, which probably would have netted you a 1 to 2 if I had to guess. This is a 1 to 3. So it's still pretty healthy. And I didn't do any of these trades because I'm still very much new to this. I don't want to make an amateur trade that I don't know with my gut what the fuck I'm doing. If I don't know what I'm doing, why should I get in that trade? I'm just setting up for failure, right? What tonight could happen? What could happen tonight is price is consolidating right now. And on the 1 hour, we broke under this low that price made. So this would be a lower high. And this would be the indication that price could potentially go lower. Now buyers are sitting here, and I would like to imagine that once price confirms on the 1 hour a downtrend, I do not believe it'll go down here. I think there's a chance, but the 4 hour contradicts that because the 4 hour respects every other higher low. Tell me if I'm wrong this entire video. I've pretty much been on the dot. As far as I'm seeing it, everything I've said is literally on the screen. Price made this high and it made this new support level. Then it broke under. Whatever happens here, I'm not trading. I don't care if it goes down here. I don't care if it goes down here. I'm not trading it. I'm trading based off of solely ICC. I am respecting my rules, my strategy. Price for me to want to trade this would have to correct, respect the lower high and create something here and form a lower high here and then break out, close the candle here. I would then enter a trade right under this low. I would enter a trade around here and retarget these lows because buyers stepped up here for the recent support level on the 4 hour. Now it would suck if we came back down here
and close the candle down here, because then that would really mean that price is still consolidating on the higher time frame, which is, I guess it's fine, because like I said, I'm making profit. I would be making profits off of this move, not off of the higher time frame, right? So what would that look like on the RR? We get into a trade where we marked it. This is the correction, and then we'd look for a 1 to 3, right? The Fibonacci to me at this point wouldn't necessarily matter, because this is not a new high or a new low. This is just an area where, okay, in ICT, like this would be a premium and this would be a discount range for like the higher time frame. In my, from what I understand, correct me if I'm wrong, I don't trade ICT anymore, so I wouldn't necessarily tell you everything that I would know about this. Uh, but what I do know is that every time there's new highs or new lows, it actually is extremely oops, sorry. It's actually extremely useful to use, because if you notice, buyers always step in when it's in the premium. I'm sorry, when it's in the discount range, right? Whenever it's a new high or new low. That's interesting to know. That's something that more than often happens. Good to know, right? Every time price makes a new high and, shoots back down, not only does it close the gap, but it also goes below into the discount range. Just keep that in mind. That's been a consistent indicator that I've noticed recently. I'll keep that in mind for the future. Solely off of ICC though, we are just simply retargeting lows wherever buyers stepped in for the most recent high. And because we're on a possible, not possible, this is actually confirmed, because we're on a uptrend, right? And then we broke out of here. Because we're on an uptrend, I am more likely to assume the price will respect these lows. So I'm not targeting the wick down here. I'm just targeting this range in which it's a healthy 1 to 3, and I'm respecting that price won't touch this area. It might, to me, like I just want the 1 to 3. And then wherever price wants to go, it'll be on a downtrend. And wherever buyers want to step in, as soon as they step in, it will likely be above this range. And that's when I'll check the lower time frame to determine if buyers are willing to flip price back into an uptrend. Then I would take profits. It would probably be like within this, for sure within this range, but a 1 to 3 is extremely perfectly fine with me. I can definitely sleep on this, right? And that's if I use the 1 hour to target the bearish trend under this macro uptrend, which is what we're currently looking at right now. Like this is an uptrend. This is 100% an uptrend. The better case that you want to make is the initial response I said, which was that price will respect these higher lows. Price will, on the 1 hour, confirm the uptrend, which means higher highs, higher lows. None of this crap. Price is respecting on the 4 hour. We want to see it confirmed on the 1 hour. We want our entry on the 15-minute or on the 5-minute, and then we engage with the 4 hour high, because the 4 hour high was the first uptrend, and it's also the strongest uptrend because it's the higher time frame. Also, the daily has confirmed a higher high. That would confirm a higher low on this end, and it also broke out of here, which is an indication, which also means we can target these highs up here. What is that, 70k? 70k. And if price moves up here, which more than likely will, it's not guaranteed, to me that probably means gold will go even lower, which gold has already made a fucking run, right? Anyways, I'm not a gold trader. If gold has perpetual futures, sign me up for on Jupiter. I don't trade accounts like prop firm accounts. I just solely use perpetual futures off of Jupiter, and then I set my SL and TP. It's working pretty fine for me. I have no issues with it really. It's just sometimes, not sometimes, but very rarely the case. Like Jupiter doesn't. I think it's because of like how volatile the markets can be at times. Jupiter doesn't give you an exact profit and stop loss number displayed for you whenever you're doing the calculations. So they give you like a guaranteed number of how much you're using as leverage. And that number, I just do the math quickly with the calculator. Like, oh, how much will I possibly lose or take profit on with, measuring out the charts with this tool. And then I just do the numbers on a calculator, and I just determine whether or not I want to go in, right? But yeah, I'll just leave it there. I would definitely take this trade later tonight. In my opinion, it would just be a little small trade. Higher time frame though, it is an uptrend. This would just be something towards this range, but nothing that contradicts the support range that's going on the macro trend, which is the 4 hour. But yeah, that's my thesis. We'll see what happens tomorrow. I'll try to make a video on it, and yeah.